Yes, Justin. The National People's Congress started their annual meeting on Saturday, and it's part of something called Liang Hui. So by translation, this means two sessions. So essentially speaking, it's one of the biggest political events on the country's political calendar, especially so when 2022 will be a monumental year for the political history of the Chinese Communist Party, especially when they are attempting to rewrite history. So you know what else is a big event? Smashing the like button, of course, so don't miss that out. Anyway, just a caveat, like how Elon Musk puts it, all news sources are partially propaganda, some more than others, and don't expect anything less from the official sources out from the Chinese government body. So it will just be a trumpet blowing exercise. That being said though, I think we should still get into the details of how they intend to chart the way forward for the country and to study or even attempt to predict how all these different variations in policy and how it will implicate the companies that we have vested interest in. So for people that followed me for quite some time now, I think since late last year, I've been chanting or at least reassuring many people that hey, stability will be a key part of the party's focus moving into 2022. So in the report delivered by Premier Li Keqiang, which was translated to English, I will leave the link in the description box down below. The word stable actually appeared 28 times. The word stability appeared 16 times. So why this obsession with stability, you might ask? So maybe because they caused too much of an instability in 2021. But jokes aside, some of the intervention that transpired in the last 18 months or so might have been deemed as quote-unquote necessary evil in the long run. So anyway, I'm just going to flash on the screen at this side what are the main projected targets for development this year. So just a few key numbers to take note here. They projected a GDP growth of around 5.5%, 11 million new urban jobs, and a CPI data increase of around 3%, which is quite ironic if you think about it, because the rest of the world seems to be trying to fight with the inflationary problem, but China on the other hand wants inflation to happen because their 2021 inflation numbers for China came in a little bit on the softer side. So I think one concept I wanted to talk about before proceeding on to the main gist of the session was also this idea of inflation. So I think due to how the discussions surrounding inflation was being framed, at least for the last 3 quarters, it seems like inflation is inherently evil. So I think when you want to talk about inflation, you have to look at the underlying health and the underlying growth expectation of the economy to have a more balanced and a more holistic view. So inflation is good because it helps boost consumers' demand, and more importantly, it helps boost consumption, driving economic growth by extension. So not only that, it essentially devalues your purchasing power in the long run. So investors and entrepreneurs, or even laymen like you and me, are more than happy to go out and borrow the money and deploy them into your own personal projects or innovation to potentially yield a higher return. And in this case for us, to plow it into investment instruments. So on the contrary though, if there is persistent deflation in the economy, it incentivizes people to hoard onto their money or their cash with their dear life, because their purchasing power will technically increase in the long run by just sitting on it and doing nothing. However, if the underlying growth doesn't catch up with inflation, that's when it becomes a problem, and a really big one, which might actually require the government of the day to take extraordinary steps to interfere to essentially contain the repercussions of hyperinflation. So even too much of a quote-unquote good thing will be a bad thing for the economy. So enough with the inflation talks. I know many of you just want to know what the CCP just said and how it will affect our companies and by extension our portfolio. So the current projection of a 5.5% GDP growth is actually on the higher side of the street's consensus, especially when China is definitely experiencing some sort of turmoil back at home, ranging from their COVID strategy, real estate tightening, and also a sluggish consumption recovery, to name a few. So in order to support this projection, they did pledge that the central government will transfer payments to local government at an increasing rate to help fund local initiatives, and it is expected to rise by 3.9% this year. So it's clear that in order to support this top line growth, fiscal spending will make up a bulk of this entire support for the country. So there was this line that I find particularly interesting, and I quote, We will give full play to the leveraging role of major projects and government investment and refine relevant supporting policies to keep non-government investors fully motivated. So they also cited that a lion's share of investments in China comes from the non-government sectors, which represents your private enterprises. So what do they mean by fully motivated? I think it's up for interpretation by anyone. But in the subsequent speech, Premier Li did focus on a few key aspects such as tax cuts, improving the cash flow of enterprises, encouraging innovation via tax deduction, to name a few. Of course, not everything is nice and dandy for big conglomerates like Alibaba, Tencent, and Meituan. Premier Li did hint on what to expect for such enterprises, and if you want to listen to that, stay on till the end of this video. So I think one of the greatest uncertainty that many investors can get uncomfortable with is CCP's definition of good capital and the role of capital or foreign investments in this case in the entire Chinese machinery. So one fine day, China can get along with 改革开放 and open up their economy. And the next day, they can crush an entire industry overnight just because it's not aligned with their own party goals. So I think the closest explanation that you can get from top officials will be the following. So Premier Li himself pledged that, and I quote, "We will promote the common development of enterprises under all forms of ownership, but with a caveat of course, we must have a good understanding of the defining features of capital and the way it works, so as to support and guide its well-regulated and sound development." So to answer the question simply, I highly doubt that any senior Chinese official will give investors a straight answer in their face with regards to not screwing with the capitals market. Not now, not anytime soon. I think this uncertainty will be here to stay. So the closest discussion was just a simple, broad commitment that they will promote the development of venture capital. That's it. That's all you get. So I understand the frustration though. You don't get to shut down an industry overnight and then come out and say that, hey guys, no worries, we still value and of course encourage all you foreign shareholders and foreign investors and are friendly to all the different stakeholders and investors out there. I think investing don't work that way, especially to those investors that got burnt by the edtech sector and Temasek Holdings included. So personally, I fundamentally believe that it's a lot more nuanced if you want to compare edtech with these so-called different tech conglomerates in terms of scale, in terms of magnitude, and in terms of influence. But yes, I do agree that the possibility of a rug pull can happen, like what happened to all the Oriental TAL, for example. But I think it helps to think in terms of probability instead and what are the clear repercussions. So clearly, China also appreciates the role foreign capital play in the entire system and how some variations of the capitalistic mechanisms had helped expedited their progress and their prosperity. So the capital market is still a key element for the development of China, and if they wish to continue prospering, they can never neglect this part of the equation. However, the main caveat is still the active involvement of political influence in the capital markets, exacerbated by the regulatory overhang. So the final assessment on whether is this a good opportunity or not, I'll leave it up to you to decide as a viewer and of course as a fellow investor. Lastly, back to the more concerning view from the CCP. There is a portion of the speech where Premier Li was walking everyone through how they intend to help boost growth, and one aspect is to help lower business costs. And I quote, "We will encourage large platform enterprises to lower service fees and lighten the burden on small and medium businesses. Further steps will be taken to regulate and overhaul fees charged by industry associations, chambers of commerce, and the different intermediaries." So encourage is a keyword here. We can already see such developments in the food delivering industry affecting companies like Meituan and also Alibaba's consumer service arm, which is Ele.me. So in the short term, there might be increased pressure for internet platforms like Tencent, Alibaba, Meituan, Pinduoduo, Jingdong to reduce their take rate and fees to help the country tide through this recovery. And of course, there are two sides of this argument. You can take the side where this will permanently impair their ability to grow profits in the long run with this so-called hard cap on profits. Or you can also take the other side where it might be transitory in nature and technically in China, both public and private enterprises are called upon to tackle the country's problem together as a country. I think my baseline on this is quite clear. I don't think the people in CCP governing the country is dumb. They know that they cannot keep restricting profits of all these different tech companies indiscriminately. It will erode the entrepreneurship and capitalistic spirit from the ground up. That said though, they hate monopolies as well as those who profit from exploiting the different stakeholders. Hence, it's an extremely tightrope they are currently balancing on, but I believe as long as the companies continue bringing value to the marketplace and to all the different stakeholders, they'll be able to continue reaping profits and margins in the long term. So with that, I'll see you in the next video, but more importantly, I'll see you on the moon. Goodbye!